right, guys, good afternoon. Welcome aboard. This is our top 10 stocks of 2021 first. This is the recap of the stocks that we picked in 2021. We're going to go over each of them and take a look how they did for the year and what do we think about them moving forward. Are they a buy, sell, or a hold? So I'm going to have the ratings for each of the top 10, and we're going to go over each one together. My name is Carlos Garcia, founder and CEO of G.A.R Capital. Thank you so much for joining me this Saturday, January 8th, 2022. Let's go over it together. All right, so here is the spreadsheet, exactly how it worked. So January 4th, 2021 was the first trading day of the year. So that's how we're going to go by, December 31st being the price. So we could see it here. So let's go over each one one by one and do it from there. So the first one that we had here was Apple. Apple's January 4th, 2021 price was $129.41. It went to $177.57 on December 31st, 2021. The change in price from that 1 year was $48.16 per share gain. That's a 38% gain for the year. If you invested $1,000 into this stock on January 4th, 2021, you are now at $1,380.60. The profit gain was about $380.60. So again, I can't go wrong with Apple. At the end of the day, Apple's a great company. So let's go ahead and take a look at Apple together on the daily. We're going to chart it up together and take a look at it. Okay, so by all means, the first and foremost I want to say is Apple is a buy. That's my favorite company to own. My full IRA is in Apple. So again, I also own some Apple with SpyG. I also own some other shares in Apple in my brokerage account. Investment Club already knows. So you can see how high we went up to. We went as high as 182.94. We're at now 172.77. We're about $5 off the closing price on December 31st. I still think it's an amazing company. They have so much presence in terms of technology. I mean, there's not much more you could say how profitable they are. They're amazingly profitable. It just is what it is. They're a juggernaut. Let's go over some stuff here. We're going to go ahead and take a look here. I'm going to put Apple stock on Google. That's going to help us break down some of their financials for the year. Let me go ahead and bring that up for you guys. So let's go ahead and bring this up here. And we're going to go ahead and take a look at Apple here. Let's take a look at quarterly financials. We could take a look here. This is their last earnings report was September 2021. Revenue growth 28.84%. Good sign. Net income 62.16%. Another great sign. Diluted EPS grows earnings per share 66.22%. Green. How about profit margin? They are up 25.83% year over year. Excellent. Operating income is up 61%. Net change in cash, I mean, they have what, 653 million. That's where the net change in cash. So that's down about 86%. So a little more spending for some buybacks, which is fine. Cash on hand, they only have $35.94 billion, down about 8% year over year. And let's take a look at cost of revenue. Cost of revenue was up about 20%, about 48.19%, $48.9 billion. Let's take a look at their earnings calls. They will be scheduled for January 27th on quarter 1, 2022. They did miss their last revenue forecast of down about 1.91%. That was a miss, but they beat their earnings per share on quarter 4. But you could see quarter 3, quarter 2, and quarter 1, all double-digit beats on EPS. On revenue, 2 out of 3 double-digit beats in terms of revenue growth. So again, not much you could say about an amazing company. Obviously, there are a lot of talks between the Apple Car getting into EV. They also have some VR glasses they're working on, which is pretty cool. So again, I like what they're doing in terms of the metaverse. That's a good sign. And then obviously the Apple Car, and of course I'm a big Apple fan. I'll probably buy one because I'm that guy and I love Apple. So that's Apple so far this year. It was a great buy. We own it. We love it. Not much more you could say. Let's go ahead and take a look at Amazon stock. Amazon is our number 2 on the list. I'm going to go ahead and move this again, and we're going to go ahead and bring up Amazon on the chart together, and let's take a look at how it did. Amazon, January 4th, 2021 price, $3,186.63 a share. December 31st price, $3,334 change of about 147.71 a share, gained about 5%. So again, if you invested $1,000 into to Amazon, yes, you could buy fractional shares. You gained about $46.35. Is that a huge gain? No, but Amazon is a great company. You want to hold on to this. Let's take a look at the chart together in 1 year. You could see in January, right around here, right around the 8th, you could see we did pop as high as 3,773, came back into range. That was after the earnings report, and then we just kind of ping-ponged around. We also topped out again at 37.61 and came back down. So we're really just between a range now, about 31.38, 35.54. As you know, we've marked Apple as still a buy. Amazon is still a buy, I think, at 31.36. You pull the trigger there and buy some more. I think Amazon is an amazing company to own long term. I don't think I have to explain what Amazon does in a sense. Let's take a look at some of their financials. That'll really give us a bigger hint on what's going on. Revenue increased about 15.26%. This is from September 2021 earnings report, about $110.81 billion in revenue. But their net income year over year is down 50%, $3.16 billion. Diluted EPS about $6.12, down about 50%. Margins are down 56%. That's usually due to hiring spree for the warehouses and drivers. Operating income is down 21.67%, $4.85 billion. Net change in cash, negative $10.49 billion. That's how much they spent. Again, like I said, more drivers, more warehouse workers, obviously 37.3 billion, a 37.3% downside. Their cash were up marginally, $29.94 billion they have cash on hand, and their cost of revenue went up 10.2% to $62.93 billion. So again, they have about $30 billion in cash. They could do a couple of different things. Obviously, more warehouses, more drivers, kind of get more market share for more of the online retailers. Amazon is something that I use almost every day. That's pretty much the number one thing we shop at, me and my family. So that's a company that, again, if you use them, you want to keep invested in them. So I think Amazon is a great candidate to hold. It's a buy. I still rate it as a buy. Q3 2021, their EPS missed down 31.21%. Their revenue missed about 0.70%. But other than that, the previous 3 quarters were all double-digit beats and even a triple-digit beat in Q4 of 2020. Again, that's more of the holidays. So again, we're going to see our Q4 earnings report for Amazon relatively soon. I believe I don't have the date on when they will report. I'm assuming it should be February. So again, you can see revenue beats 2 out of the last 4 quarters. Again, the last 2 quarters were revenue misses. Not very much. Revenue misses, kind of slight. So I still think Amazon, in terms of just the platform for buying stuff, in terms of the retail side, AWS by itself, their cloud company, could be a Fortune 500 company on itself. It is not a value company. It is still a growth company. It is relatively expensive in terms of price to earnings. If I bring up the price to earnings here, I'll get you that information right now. Their price to earnings multiple on Amazon. Let me see if I can bring this up. I'll bring up Yahoo Finance. Much easier. Yahoo Finance here on Amazon. Let's see if I can search it here. PE ratio of about $63.62. So keep in mind that for every dollar you're buying in terms of earnings, you're paying $63 for it. So if we compare that to the S&P, so we'll go ahead and get the S&P 500. The PE ratio for the S&P right now is about 29.46. So let's call it 30 to kind of make it easy. That's where the current price to earnings ratio for the S&P is at 29.46. That's pretty above average. Usually the average is right or below 25 for the past, 100-something years on price to earnings. Here's the price to earnings for the S&P. You can see right around 25. We broke above that a couple times. We may revert back to around 25 pretty soon. That means we need a little more earnings or a drop in the S&P price currently. So again, let's say 30. So again, at the end of the day, you're paying double for price to earnings in a company like Amazon. Amazon does not do a dividend. So keep that in mind. So with that extra cash they have, they're really just acquiring. They're trying to expand their business. So again, they're not a value company. They still are a growth company. Expensive, again, still relatively expensive. But again, I think 31, 36 is a great level to buy some. Again, we know what Amazon is capable of what they can do in terms of earnings and profit power. The issue with them is that they're still growing. They're still paying a lot of money for overhead, warehouses, and such. The only thing that I'm looking for Amazon next year, or this is 2022, is a stock split. I think a 10-to-1 stock split would be excellent for the company. That'll bring us around $325 a share. That'll help more retail investors to get in. Obviously, Tesla did that and it worked out for him. Apple has done that a couple of times too. Amazon has done it in the early 2000s as well. So it's not like something they have not done before. So I would be expecting Amazon to do a stock split maybe in the year coming, but I can't guarantee it because I don't run the show. So just a heads up. But if I were Jeff Bezos or the CEO there, I would definitely consider doing a stock split. A 10-to-1 would definitely be helpful. Again, that'll bring us down to around $325 a share. Pretty good stuff if that happens. But until then, we're just stuck in a range between 35.54 and 31.36 on that. If we want to take a look at PE ratios in terms of Apple, the last stock that I did here, let's go and take a look at their reading in terms of PE ratio. They're right at 30. So that's pretty much the exact number of the S&P PE ratio. They're not expensive. They're not cheap. They're pretty much right at market multiple. But if you look at Apple in terms of the cash gains and their profit margins, I still think Apple is relatively cheap. This looks like a $200 stock in my opinion, and that's what I'm expecting for this year. So next we're going to take a look at Blink. Blink is an EV charging company. We're going to take a look at that next. Again, as we know, EV is the future, what everyone's really into right now. So again, I don't treat it more as a trend, as more as just a change in direction in terms of the market and what people want. So again, let's take a look at Blink together. Blink, again, we know it's a growth company, high beta. Again, they're very volatile. But again, we wanted to include a couple of these names in terms of the top 10 because, well, you got to have some kind of speculation in there as well. So let's take a look here at how they did. Let's see if I can bring up financials first. Okay, let's take a look at Blink. January 4th, 2021 price of $37.51. Their December 31 price was $26.51, down about $11 per share, down about 29%. So again, if you invested $1,000, you're right at $706.74, about a profit and loss of around $293 in the red. So again, I already marked Amazon and Apple as a buy. I think Blink is still a buy as well. So let's take a look at the daily. Right, bro, we broke support. Right now, 2370. We're at 2311 was the support. We hit the high in a lot of high beta names in February. That's when we hit the highs, and then we started kind of going side by side. If we bring up here on the max of Blink, you could see Blink was a sub $5 company for a while, and then we know that they did explode in February and then came back down. It looks like it's testing that 100-day moving average on a 3-week max, about a 10-year chart here. So again, this is a big level for Blink. Again, I kind of see Blink as the future in terms of EV. They are the charging company. Again, how many gas stations do you see in the United States? I think we're not even scratching the surface of charging stations. Blink will be the beneficiary of that. This one is at least a 5-year hold in my opinion, 5 to 10-year hold. So I'm willing to hold this name. I own this name. I own Amazon. I own Apple as well. So I still think Blink is a buy. Let's take a look at some financials here. Let's go ahead year over year. Revenue, $6.4 million. That's up 606%. That's a really good sign. I always look at revenue for up and growing companies because you can't fake sales. You can fake profit by just laying off everybody and cutting expenses. That's easy to do. Take a look at the income, down about negative $15.32 million, down about 291%. Diluted EPS down about 200%. Profit margins are up 44.6%. Operating income is down 304%. Net change in cash, negative 8.9%. So they are in debt. But cash in hand, about $133 million. So again, the net change, the spending, you could see it. They're spending to grow. But again, cash on hand is up. Cost of revenue is up as well. But let's take a look at EPS. Complete 4 quarters, 4 misses. But you can see they're improving as they go. The miss was only about 6.29% on EPS in the Q3 of 2021. But their revenues are beating. So they are making money, which is a strong thing to see. 35.56% on a beat on Q3 2021, 65% in Q2 of last year, Q1 last year, 24.86 of a beat, and Q4 of 2020, about a 36% beat on that. So very good signs to see on Blink. Again, you'll need a sense of patience on this one. If you just want to cut bait on it, that's completely fine. I understand a lot of people don't want to handle these kind of high beta names, high growthy names. But again, in my opinion, I think it's worth a hold. I think in terms of EV, this is one of the stronger companies to own. They don't sell cars. It's all just charging. So again, you don't have that volatility in terms of car sales. You're really looking at, are they providing charging stations? And they are. Let's take a look next at Bitcoin. Bitcoin was one of our top 10 of 2021. So Bitcoin doesn't provide revenue, doesn't provide any of that stuff. So that's pretty easy to go by. So let's go ahead and take a look at it here. We're going to take a look at futures of Bitcoin. Bitcoin futures are easier to go by. And you can see we have Bitcoin started at 32,023 on January 4, 2021. That was the first trading day of the stock market. So I kind of did all things being equal. 46,195 was a December 31 price. The change of 14,172, a gain of 44%. If you invested $1,000 in Bitcoin on January 4, 2021, you gained about $442.56. Not bad. We're going to go ahead and mark this here. Okay, so that's Bitcoin. Let's take a look at Bitcoin together. 38,042 on Bitcoin futures is your next support, but major support is right around 31,000. A break of below 40,000. I'm definitely looking to buy some more. I still buy some every week. You guys can see I do own Bitcoin. I show my portfolio every week, and you can see in totality, I have around 2.24 Bitcoins currently right now. So, and I still buy some every single week. That hasn't changed. So I'm still bullish on Bitcoin. I still think cryptocurrency is still the future in terms of, digital gold in a sense, scarcity in a sense, and the future of commerce online. I really like Bitcoin, definitely. So again, volatility is the name of the game. If you want high returns, Bitcoin and cryptocurrency are something that you may be interested in. But again, there's a lot of roller coaster swings, so you just have to get used to it. That's just the name of it. The next one is Delta Airlines. I forgot, Apple does pay a dividend. Understand that. Apple pays a dividend. Amazon, Blink, Bitcoin do not. So again, pays a dividend. That's not included in the numbers of return. So you did make some dividend too. Not a lot, but some. Let's take a look at Delta Airlines. January 4th price of $38.73. December 31 price of $39.08. Gained it by 35 cents per share. It's up 1%. If you invested $1,000, you made $9.04. But Delta, I do own as well. A roller coaster ride indeed. You could see how we started. We peaked right around March and April, kind of the flying season. And again, we kind of went sideways. But again, we could see a bounce back to 46 on Delta. Delta, I really like a lot. I believe Delta is the best airline, in my opinion. Let's go ahead and take a look at it together on their financials. I do believe in the turnaround of the travel industry. Again, I don't like cruise lines. I think airlines are the way to go, just for the simple fact that there's business travel with airlines. There's not a business travel with cruise lines as much. We'll compare it here year over year. Keep in mind, this is from 2021. So last year and compared to 2020, you could see all the numbers have gained from a complete lockdown. So kind of look at it this way. It's a little different in terms, you can see revenue is higher. Well, of course, it's higher compared to 2020 lockdown, income, EPS, profit. But again, what you're looking at here is the future. So their next scheduled earnings report is on January 13th. That is next week. The last 2 quarters they did beat. So again, that's good to see. But let's see if Delta can continue. I like Delta. I think Delta is a buy. And I think that right now, in terms of airlines, this is literally the worst time possible for airlines. You could see how it has been just all the way down to around sub 20, bounced back, and you can see we can get back to around the reversion of the mean, right around 55 or 60. And then if you wanted to pull the trigger there, that's completely fine too. Airlines are volatile. They're more cyclical, meaning that when times are good, people travel. I always say the best way to check an economy is check the malls and the airport. If the malls are packed, people are shopping. If the airports are packed, people are traveling. And again, business and leisure are a big, big deal in terms of the economy, especially the airports, especially the airlines. Why not go with the best airline, in my opinion, Delta Airlines? Next one I get asked of a lot, DraftKings. Let's go and take a look at it together. All right, DraftKings here. So far we have 1, 2, 3, 4, 5 buy ratings on the 5 stocks. DraftKings bought in at 44.86 January 4, 2021. December 31st, you can see 27.48, a change of $17.38, down 39%. Again, if you invested $1,000, you're down about $387.43. Again, I still love DraftKings. I still think DraftKings is a buy. Let's take a look at the chart. Basically, we've broken support many times, but again, really the mega support, again, if we extend it as much as we can, is right around $17 a share. Right around April and March, we got around 74.38, and then we got some de-risking in terms of these high beta growth names. That's where DraftKings started taking a hit. Good news, New York City and New York State is now legalized sports betting. So again, FanDuel and DraftKings may get some relief here and bounce a bit. Good to see. Would love to see them get back above 34.29. Let's take a look at DraftKings financials. DraftKings stock, and I still own DraftKings, yes. And I still buy dips, yes. Real quick on terms of DAL, which is Delta Airlines. Let me give you the PE ratio on Delta Airlines. Their PE ratio is under NA. So again, their price to earnings doesn't show me exactly how much it costs. So that's unfortunate to see. Let's go and bring up DraftKings. PE ratio as well, not as NA. So they don't have a PE ratio. Let's take a look at the financials for DraftKings together. Bring this up here. You can see revenue year over year up 60%, 212 million. Their net income is down 37.75, so negative income. Profit margin negative. Again, a lot of those free $100 bets that they give out, 14% margins are up. Operating income is down 52%. Their net change in cash was down about 85 million. They spent down about 488%, but they got a nice cash cushion, about 2.39 billion cash on hand. That was up about 109%. And you see cost of revenue was up. So again, it's a cost of revenue that we talked about. These new companies, these companies that are trying to build, they're going to spend. Let's take a look at their earnings. The Q3 2021 was a miss, 47.56% on EPS, and a miss on revenue. The last three revenue reports were green. This one was down 10%. They report on February 25th. So again, this is a company that I use. I have won 2 fantasy football championships in a row with DraftKings, so DraftKings has a special place in my heart. Very easy to use interface, but again, it's something that I like. Again, if you like sports and fantasy sports and possibly sports betting, I believe DraftKings is still the bellwether, the best of the breed. Yes, right now it has been under weakness, but I think it's an opportunity. If we can get to around 20 a share, I'll definitely buy some more. So I consider DraftKings a buy. It's a high beta, high risk, high reward. We know this. Shouldn't be a big part of your portfolio anyways. But again, if you're looking for a little speculation, I think DraftKings is one of the better ones to buy. Right now, people may not see it, but I think DraftKings, once you start getting more states approving sports gambling, DraftKings is really going to come to the forefront, and it's going to do very well. Let's take a look at the best one, the best stock of the top 10 of 2021. It was Nvidia. I mean, what more can I say about Nvidia? Nvidia, to me, is the king of semiconductors, but it is off the highs. Let's take a look at Nvidia here. We can see it. Let's take a look at it. Nvidia 131.14 on January 4th, 2021. Was at $294.11 December 31st. That's a gain of 124%, change of 162.97 a share. $2,242 is what you would have currently if you invested $1,000 in the company for a gain of $1,242. Again, the assumption is you put $1,000 in each for the top 10. That was the easiest way to break it down. So a nice one. Nvidia does pay a dividend. Nvidia, man, how great are they? Nvidia is amazing. All right, so we'll go ahead and move on. The big winner of the year of our top 10 was Nvidia. Nvidia, I buy dips. I'm waiting for 268.64. That's my next level to buy. It got as high as 346, so imagine. We could definitely revisit that. Let's see if we do bounce as the NASDAQ has fallen. Let's take a look at Nvidia in the terms of financials. I'm going to go and bring this up here. Nvidia, their PE ratio is around 84.11. A big, big PE ratio, keep in mind. Let's see if we can bring up their financials here. Nvidia, more about Nvidia Corporation. Okay, so let's see the PE ratios in the 84.11. Let's see if I can bring up their financial performance. We'll go to annual, and you can see year-over-year change in 2021 from 2020, up 52% in revenue, 16.68 billion. Net income, 4.33 billion, up 54%. Diluted EPS, up 53%. Net profit margins, up about 1.44%. but you're talking about a 26% profit margin. That's great. Operating income was up about 65%, 4.72 billion. And you can see about 10 billion worth of net change on hand. They spent a little more, and net cash on hand is about $847 million. Their cost of revenue is about $6.12 billion. And their dividend they pay currently is about 0.06, very marginal. But keep in mind, guys, they are a growth company. We know what Nvidia does. We know what's important with them. Of course, when it comes to artificial intelligence, self-driving cars, graphics cards, Nvidia, they can't keep them on the shelf. So again, there's still demand. Obviously, the stock to me does not really show the future growth of an Nvidia. The only thing is Nvidia is expensive in terms of price to earnings. I want to see their earnings report coming up. If their earnings do get stronger, then P multiples will probably reset a bit. But again, 268.64 seems about right for an Nvidia for a buy. If not, if you're looking for maybe a sub 220, that wouldn't be a bad idea. But again, I think Nvidia is a winner. That's a buy as well. Let's take a look at Square. That's the next one. Square here, 221.16 on January 24th, 2021 price. December 31st, 2021, 161.51. That's a loss of 59.65 a share, down about 27%. So again, if you invested $1,000 into Nvidia Block, which is Square, back in January 4th, you're at $730.29. You're down about $269. That's about 27% down in that year period. So let's go ahead and move on to Square, which is now Block. And you could see on the daily just pretty much puked at the end of the day. But they're not the only one. PayPal also fell as well. So again, you have PayPal and you have Square, these payment processors. Visa took a little bit of a hit, MasterCard as well. And you can see, in my opinion, I think Square absolutely has the forefront in terms of cryptocurrency and payments. Again, I love what they do with Cash App. And I really, really trust the CEO, which is Jack Dorsey. He also runs Twitter. Again, 124.22 is my level to buy some more for Square. I'm taking a look at the 1 year, 20-year, 1 day daily chart, and you can see how it's gone to around $20 a share and then bounced as well. So again, right around 124.22 would be a nice level to buy. Let's take a look at Square in terms of their price to earnings. Price to earnings ratio is 149.97, even with this drop. So again, they need to show me a little more. So with that being said, I think it's a hold. I would wait for 124.22. The rest, I would say I wouldn't be buying Square here yet. I think 124.22 is the level you're looking for a Square. Let's take a look at some of their financials together. Let's go bring that up here. Okay, Square. Let's go to annual. And you can see their revenue is up about 101% year over year on revenue, $9.5 billion. Net income is down about $43 billion. Margins are down about 71.89%. Operating income down about 170. But again, cash on hand is up, cost of revenue is up, net change in cash is up. The diluted EPS isn't the best, but you can see, again, at least they have a profit margin. They are profitable. So they're not exactly a high beta. They don't make any money. But for the most part, you can see that at least the revenue's up, sales are up, which is important. So again, will this be a turnaround story? I believe it will be, but again, it's going to take some time because it's a high beta name. So again, expect Square to bounce in the future as, you know, the Venmos of the world, the Cash Apps of the world, the PayPals of the world. Again, people still use those services, but again, the stock is not reflecting that at the end of the day. Next we have here is cannabis ETF. A lot of people always ask me about cannabis. Do you buy cannabis stocks? I just buy the ETF, which is the THCX cannabis ETF. 1302 was January 4th price, $8.54 on December 31st, down about 34%. So again, if you invested $1,000, it went to around $655.91. One of the worst performers of the year. Again, another growth name. So again, I kind of kept it with just Square, THCX, DraftKings, and Blink, being four strong growth names, three mega cap tech names, and two value companies with a crypto. That's not bad at all. So again, Walmart being a value name, that's the last one, and then you have Delta Airlines being another value name. So again, we kind of broke it down that way. We kind of pushed in terms of a turnaround year of 2021 compared to 2020. We wanted to push the envelope in terms of growth, and that's what we were looking for. We got it right with an Nvidia. We got it right with an Apple. We got it right with a Bitcoin. But Nvidia being the big winner, that kind of helped the whole thing over. So let's take a look at cannabis ETF together, THCX. Again, this is a basket of companies that are in the space of cannabis. So we're going to go ahead and bring up the daily. And you can see we hit the top of February. Remember Blink, Palantir, those names all peaked in February and then has slid and slid and slid. So again, if we go ahead and break down exactly in terms of what we're looking for, again, for possibly another buy or dip buy that I'm looking for. Again, a sub 5 would be great. I would say $7 a share wouldn't be terrible. That's when we start getting to support. So I'm gonna take a look around $7 a share. $5.91, $6 is your major support. If that breaks, then then a lot of cannabis companies are getting hurt. The good news with THCX is that it's a basket of all of them. You don't have single stock risk. So granted, if this is falling, a lot of the cannabis stocks are falling. So if you had a Tilray instead of a THCX, you could see the difference. It looks very similar, but again, 917, if we bring up the daily, you can see as high as 67, then to 642. But yet, if you went to THCX, we only get as high as $30, and we're at $8.19, which is still better performance than just the Tilray themselves. So that's why I kind of went with THCX. All we need for one is just one of the cannabis companies to really hit a home run. And then also, if we can get some damn legalization in this country, more states adopting, obviously THCX will be better off for it. So let's take a look at THCX on Yahoo Finance. They do pay a yield, so don't get me wrong, they do pay a yield. Let me see if I can get that. They do pay a dividend yield, so again, I didn't write that. My apologies. So let me go ahead and write this down. Pays dividend. So it does pay a dividend of around 1.18%. Year-to-date total daily return, that's from this year. Expense ratio is about 0.75%. That's what you have to pay if you get one of those ETFs. Let's take a look at what they hold exactly, because this is an actual ETF. And here's the sector weighting. Again, it's more healthcare, as we know. So the top one they have is Tilray, Canopy Growth, Village Farms, Growth Generation, Kronos, Amoris, Hydrofarm, Fire and Flower, Organigram, and Riv Capital. So again, you can see kind of an even structure there, and that's really all they hold. Price to earnings, again, there's an NA, price to book 2.5, and then price to sales 2.76. So for this one, again, for a cannabis name, that's very speculative. Again, if you are into this space, THCX is the way to go. But again, if you're just looking to cut your losses on this one, I can understand that. Below 7, I'm a buyer. So again, I want to hold THCX. That's not the only ones I hold. I also own Planet 13, which is the biggest cannabis distributor or store in Las Vegas. I've been there a couple of times. It's very, very cool. And then I also have True Leaf, which is one of the bigger dispensaries here in Florida. And again, they do some really great work. So I really like them as well. So again, I have 3 stocks in cannabis. I like the space. I really do think that we're going to get that in the future where it's going to be legalized. Right now, it doesn't look like that, obviously. But again, we just have to wait and see. This is one of those names that you're buying for the future. That's really it. And if it's something that you really don't feel the patience with or you're not into it, I would recommend to sell it if that's the case. This is probably the weakest one out of the whole top 10 list. But again, I went for growth in this one. Okay, we're going to go to Walmart, the last one. And Walmart, we expected down 1%. It's a value company. We've done AT&T before where it was just basically flat on our top 10s before. So we always add some kind of value. We don't want just pure tech or pure growth or pure anything. We kind of want to have it as even as possible, down about 1%. If you put $1,000 invested, you're down about $12.56. The good news, it does pay a dividend. So with Walmart, let's take a look at their information here. Walmart PE ratio is a bit high. They are a consumer staple. We know no matter what happens, people are going to shop at Walmart, no matter if times are good or times are bad. So again, the PE ratio is a bit high in terms of being pricey. Let's take a look at their earnings per share. We know that $30 is the PE ratio for the S&P, so you're talking about 21 above that. So let's take a look at Walmart financials. If I can bring it up here. See Walmart financials. Let's take a look at it. Okay, this doesn't have it the way I like it. So let's go ahead and bring up Walmart. Okay, so on Walmart, we can see a year-over-year change, revenue up 4.32%. with Walmart, again, guys, they're not a growth company. You're pretty much hit a ceiling of how much revenue they're going to get. $150 billion in revenue they make every quarter. That's completely just what happens. Operating income is up marginally. Cash on hand, $16 billion, up marginally. Net change on cash, they spend a little bit more on the online shopping with Jet. Their net profit margin, pretty much razor thin, 2.21%. Most grocery stores have that, very razor thin margins. Diluted EPS about $1.11 and net income about $3.11 billion. That's down about 39% from year over year. So again, in 2020, Walmart was big. We know that. Again, everyone was buying online. That was really much the only place, Amazon and Walmart. In 2021, Walmart being, kind of the backseat as more people were going back to the malls as we had the great reopening in a sense. So again, Walmart, you know what you get. It's pretty much as boring, as safe as one of the safer ones to get. So we added that. So if we accumulate everything here, average return is right around 8%, cumulative return about 81. This is all from yeartodate.com. So again, if you put $1,000 in each of these things, you pretty much gained about 8% return. That's not great in terms of total because the S&P gained about 20-something% year over year. So year to date. So this is why I say the index funds are your friend. You don't have to do any of this stuff. Just put it in an S&P fund, VOO, and make life easy. But if you already have some VOO, you already have some SPY-G, you already have some SPY, what have you, and you're trying to look at some names that you want to kind of pick up and have it on your portfolio, again, you can't go wrong with some core holdings like an Apple, an Amazon, an Nvidia, or a Walmart. Walmart being a core holding because you do shop there, I'm assuming. But again, cannabis, Square, DraftKings, Blink, we know what they are. We know what we expected with them. They just didn't work out in terms of growth this time. If we would have just closed the top 10 stocks of 2021 in February, we'd be all cheering. But that it wasn't the top 10 stocks of February. It was the top 10 stocks of 2021. So let's take a look at it. We'll observe it. Obviously, I own all these. The only one I don't own is Walmart, but pays a dividend. I own Walmart and ETFs. Excuse me. Pays dividends. You see 4 out of the 10 pay a dividend. 4 to 5 out of the 10 actually made money, and that's where we got a little bit of return, about 8%. Now, I'm not setting the world on fire, but it's something. It's something. But again, Bitcoin being one that we know is extremely volatile. That's the deal. It's not a stock, we know, but look what worked. Apple, Amazon, Nvidia, we know the drill. Delta, okay, did a little bit better. So we'll kind of lump Delta and Walmart together as flat. Amazon was flat, but Bitcoin being a big one, big return. Now it's down today, obviously. This is a Saturday, it was down. But Nvidia was the big winner. So more times than not, guys, if you look at your portfolio, you usually have 1 or 2 really great winners. And then you'll have about 4 or 5 kind of sideways, and then you'll have like 4 or 5 that are just kind of down. And that's usually the case if you're managing money or you're just you're a stock investor. That's where it is. So that's our top 10 stocks of 2021. I hope you enjoyed the video. And next video will be the top 10 stocks of 2022 on a podcast and on YouTube. I hope you guys enjoy. We will catch you guys for the next one. Cheers.